Hi guys! Amid the coronavirus market recession fears, we want to share very openly with you three powerful steps that we ourselves are employing to be profitable. And in fact, we'll be showing you our live account, so stay through with us all the way to the end.
Before we continue, let us just introduce ourselves. I'm Joel.
And I'm Sarah.
We are a husband and wife team. And for me, I go through a very logical approach to collect good businesses at a very sensible price.
Okay, and I compliment Joe as the wife, okay, by using technical analysis to ensure that we enter and exit at the best time based on market trends.
And therefore, together,
We
we
are
are better.
better. Alright, for those of you who would like to stay connected with us, you can either do so through Facebook or YouTube. And without further ado, let's go into our very first powerful step to be profitable, and that is
Number one, avoid panic traps. Alright, because of this market situation right now, many of our friends have actually asked us, should they invest in inverse ETFs? For those who are not sure, inverse ETFs are actually ETFs that does the opposite action of our traditional ETFs like SPY, like Dow Jones. So when SPY goes down, the value of S&P 500 goes down, these inverse ETFs value will actually go up. All right, they also ask us, should they buy puts? Should they invest in gold? Or even, should they even close all positions in their portfolios right now? So my thinking is that there are many opinions and strategies out there, nothing wrong with that, but we must know what we ourselves are doing. If not, we are just like this person in this GIF, focusing on what if only, what if only.
and the problem with this is you will just continue dancing here and there and you will take no action, or worse, you would actually feel compelled to take a certain action that you really don't believe in.
Mm.
Okay, and in fact, right, we actually called for an emergency meeting among our friends because of all this panic that is going on around. And through this session, we really wanted to share very openly what is our approach, yeah, especially during all these market fears. And that is Joe, Mr. Far over there.
Yes, so for me, I really believe that we should focus a lot more on fundamentals now. Okay, and where is Sarah?
Okay, so I'm actually behind the scenes as usual, as always, because behind every successful man is a more successful woman. Joe, don't you agree?
Mm, okay, guys, I'm showing you live firsthand on how to avoid panic traps. Yes, darling, you are totally right.
Yes, of course. I'm always right. And therefore, we move on to powerful step number two, which is to invest in strong companies. Okay, so Mr. Fa, this is your forte.
All right, here we go.
Oh, what's that?
Okay, so this is like what we promised just earlier in the video. This is our live account. Okay, you can see this date. Where's the date? Okay, the date is actually on the 1st of March 2020.
Okay, so for those of you who are, not very detailed like Joe like that lah. That's what this is what the woman does. We actually, enlarge all this important information for you.
Okay.
Okay, so anyway, let's continue since you cannot see your own account. Okay, so all right, so you can see that our portfolio. Okay, overall you can see that we have some losing positions, right? That those are the ones in brackets. But yet, okay, our winning positions actually is just two, Baba and Facebook. You can see that the profits that we get from those actually offset our losing positions in this particular account that we have. In fact, we are overall profitable by $6,000. Okay, so for Baba, we are making more than $5,000 USD profit, and Facebook, we are making more than 7,500 profit. And even with the losing positions, okay, overall our portfolio is still gaining 6,500 USD. And the reason why those are not profiting, right, we will explain a little bit later on.
So many of us have asked us, what are the strategies we use to protect our portfolio? What do we hedge in? To me, actually, I really love to go back to fundamentals, and I really believe that if we do our homework, we invest in very strong companies at a very good valuation. That's the best hedging we can do.
Yeah, in fact, actually, Facebook and Baba, I mean, for those who have been following us all this while, you wouldn't be surprised that this is in our portfolio because we actually shared our homework on June 5th, 2019. And what we share, we really believe in it and we take action in it. Okay, we really have skin in the game. Yeah, and we also did valuation in this video, and we entered exactly at the valuation that we actually did our research on. And it's actually reaping rewards for us even now. Okay, so on to our Warren Buffett. So what did he say?
All right. In fact, I really believe in what he said. All right. Very simple. He always likes to go back to fundamentals, even during financial crisis. And I really believe that you can still use his very, very simple fundamental advice of investing in strong companies today.
Yep, and in fact, right, Warren Buffett continued his investments in strong companies. He bought them when it was at a huge discount during the financial crisis, and he made his billions just doing that. Yep. Okay, so number three, which is my forte, the number three most powerful step is you must own your own entry plan. Okay? Yeah, pardon the double emphasis, but I really, really think this is so important because there can be so many voices out there, but all these, right, if you don't own it, right, they are just mere panic traps. Okay, so just sharing very, very openly with you, as promised in the last video, we are going to share with you 3 undervalued Warren Buffett holdings. Okay, so Oxy, BAC, and BRKB Berkshire. Okay, these are companies that Warren Buffett buys himself. Okay, and you can see that we have our entry plan, okay, based on technical analysis and fundamental valuation. Okay, we have a tiered entry. We have entry 1, entry 2, entry 3. And entry 4. So basically, at each entry level, we will actually take a small position, and then at entry 3 and entry 4, we will actually take a larger position. And what we want to do is, we actually want to get all these good businesses at a very, very good discount. Okay, and yeah, just to be very, very open with you, okay, because Oxy, if you look at the previous slide, right, it has already reached below our entry 3 price. And in fact, what we did was, we did a sell put, okay, position at strike price 37.5. Okay, and it's 19 days to expiry, and we got $142 premium from it. Okay, now on the account, right, it will look like, okay, they will show that this sell put position is losing money. Okay, this is also the reason why when you look at our portfolio, many of them are actually making paper losses, because we actually hold sell put positions on companies that have already reached our entry 3 and entry 4 prices. Okay, so for companies like BAC and Berkshire, they haven't even reached entry 1. Okay, so what we do is, okay, we actually put a good to cancel order so that we don't have to monitor the market, and then click the order when it hits the price. Okay, so we have already put in our good to cancel orders. So BAC, we will buy 10, okay, when the stock price hits $27, and Berkshire, we will buy 10 shares when the stock price hits 198, and the system will automate all this for us. And all these will happen all the way when Joe is snoring in his sleep.
Actually, sometimes you snore louder.
No. Okay, so we just hope that this video was really helpful to you, and we want you to stay tuned to our next video, where we will show you really step by step how to build a portfolio goldmine generator, especially during these times. Okay, so in the next video, we will show you exactly how you can do your own entry plan. Okay, and in fact, you will also learn how you can actually have a chance to get our complete watch list and entry plan. All right, so till the next time, we'll see you.
Okay, bye-bye.
Invest safe. Bye.